Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading today and looking forward to the weekend. Let's do the little bit more extensive, longer term analysis on this weekend's analysis. I do have an announcement. I will be traveling next week also, so there will be no video. I'll be gone. There will be no videos starting this coming week. And then I will be back after the Memorial Day, which is June 1st. So I'll try my best to equip you guys, for the week ahead. And in this presentation, just quickly here, you know what, today let's look at some of the year-to-date numbers. Just kind of get maybe an overall idea of where we're at, because we're almost close to June. I mean, I'll be gone until June 1st, so that's almost half year there. Let's the performance on some of these indices and sectors where we're at overall. You can see that S&P 500 is up 11% year to date. Nasdaq is up 5%. Nasdaq is really lagging. However, Nasdaq led the entire market along with the semiconductor last year. So I'm not surprised to see that Nasdaq is lagging. And I also think this is healthy. Nasdaq letting the laggers to kind of catch up. And that's kind of been the story in the last 4 or 5 months. Anyway, Dow up about 12% there year to date, meaning this entire year from January till today. Semiconductor up about 10%. Russell 2011. Transport really shined this year. 22% year to date. We got the banks up 36% actually. So you can see the banks and the transport really leading the market this year. Obviously, energy has been really thriving. 37% year to date this year. Keep in mind, the energy has been in this downtrend bear market for the last, 4 years or so. So they've been heavily damaged. So, but nonetheless, this year making some good returns. Biotech is pretty much flat this year. Emerging market is up about 4%. Gold and silver not so hot year to date. But however, GDX is up 10% year to date. So you can see that gold and silver. Gold is negative, but silver is up 5% year to date. But GDX, which is the miners with mining stocks, they're up about 10%. Their oil's up 30%. Dollar's pretty much flat. Treasury bond is down 13%. VIX is down 10% year to date. Grayscale Bitcoin is pretty much flat in the last 5-6 months. However, it is down 50% since the peak, which we'll be talking about on this presentation. For this weekend's analysis, let's stick with these tickers here, and it is all coming up right now. All right, so let's go to the 65-minute chart, and we'll follow up with what we've been talking about this entire week. So we recognize the fact that we had an island bottom reversal, because we had an actually island top for a day or so, back to back islands there, and then we saw thrust. And then this is where we closed yesterday. And remember, keep in mind, there was the gap that was remaining open. And one thing that I talked about on the last night's analysis was that the buyers must get up and fill this gap as quickly as possible. Do not play around, because last time bulls dostling around here in this vicinity, and then we saw this kind of a downturn. So it looks like bulls learned their lesson from last time. Didn't waste any time. We opened up. That's the first thing the buyers have done, is got up here and filled this gap. And we all know that when the gap gets filled, it's going to act as what? Resistance. This is the reason why I said best case scenario is a gapping up over it for the most smooth transition, because then you don't have to worry about that resistance. But it wasn't enough gap up, but hey, it was a gap up, better than a gap down for the buyers, and at least we got up and filled that gap, right? So once that gap got filled, definitely sellers came back, use that level as a resistance, came down here and filled the gap from this morning. And then last hour, we did see that move to the downside. And you might think this doesn't look too good just looking at what we saw today's move. But if you look at the last couple of weeks of move, we have to understand that something happened today. Can you guys guess what I'm about to say? If you guys have been watching me long enough, maybe you guys maybe quick enough to kind of forecast what I'm gonna say. What's the important key point that happened? Yes, we did feel that gap, but what else though? What was the most important, the structure wise? The overall trend structure. Remember what I talked about yesterday? What did I say yesterday? Why did I stay bullish / neutral yesterday, not full on bullish? Remember what I talked about? So remember what I said? This was yesterday's price action. Remember what I said? The vicinity where we're at, that's high, lower high. This was yesterday. I talked about where we're still in that vicinity of lower high. Things can change tomorrow, but for now we were. So what has the buyers established? When the buyers got up and filled this gap right here, the buyers have established a equal high here. We are no longer in a downtrend, ladies and gentlemen. This is not a lower high anymore. This is high, equal highs, equal lows. Now we can categorize this market in the it's about short term or so that we're basing out. We are, buyers preparing to make a move to the upside as we're no longer in a downtrend threat anymore. If the bears want to continue with the downtrend, what they needed to do is get up here and then gets rejected, make yet another lower high and lower low. If we would have seen something like that, things could have been so much worse, and it would totally favor the bears with that downtrend continuing. But with that little bit of move, even though we did see that fade towards the end of the day, or pretty much all throughout the day, so buyers achieved two things today. Fill that gap, that's great, and then establish equal highs now. So now we're in a consolidational phase here. So what the buyers need to do, buyers need to what? Buyers need to cultivate that higher low. We don't have a higher low yet. We got the equal lows here. Do we have higher low? We don't. So what we need to see is higher low. So now what's going to happen is going into next week, there is going to be price discovery happening. What we don't know is a market is going to find higher low here in this vicinity where the short-term moving average is residing, somewhere about 414, 413, or is a market is going to come down more to about 411 or so, right? 412, 411 in that vicinity. So is it going to be higher low here, or is it going to be higher low here, right? That's going to be what to look for next week, right? And we want to see that confirmation of a bounce, cultivating that higher low. And then if you can see that higher low and into higher high, at that point we can say that, you know what, we got these higher lows and higher highs. Now the market is getting back up and ready to hit that new all-time high level after the cultivation of higher lows and higher highs, establishing that uptrend. You see what I'm saying? So obviously the worst case scenario, buyers do need to protect 410 for sure, right? We need to protect. I reckon that's the pretty strong support, just because that was a gap up, that's a gap down, that's a gap up, right? This in itself is rare. And so if you truly want this market to be just dismantled, or you want to see this buying pressure to recede, you want to see this gap getting filled. As long as this island reversal stays open, I have to give benefit of the doubt to the buyer, especially for the fact that we no longer have the lower high threat. We no longer have the lower highs with that equal highs, right? So I want to give benefit of the doubt to the buyers in the short term here, as long as we stay above 411, 410. It will be much, much better if the bulls can able to protect this gap, not make sure this gap do not get filled. It'll be much better if the buyers don't even let the price get near it. Maybe just find support on those moving averages, bounce right back up, and then get above 417. If we can see something like that, I think market's ready to make new all-time highs. So let's check out that oscillator and see if we can extract any more information. So oscillator did see a cross. So there's a few things I can see. First of all, I do see that higher low here on the oscillator. Remember we talked about that yesterday. It didn't come all the way back down to the bottom of the span. We prematurely crossed up. That tells us that buyers are anxiously waiting to buy that dip, and they did very, very quickly, incurring that bullish island bottom reversal. We did see that cross. What we are trying to look for now is we're trying to look for some sort of a cross. You see that right here. You see this is a very similar pattern right here. So if I go like this, you can see that there is that pivot right here, right on that short-term moving average, my second short-term moving average in that vicinity. So I can look at this as a pivot. So if this thing can find support, so this is where it looks like we saw that cross similar to here. So that's the price action bulls gonna wanna look forward to, right? So something like this coming down, hitting that short-term moving average, and then make a move to the upside. And in that process, what you're gonna see is this price or that oscillator crossing up here like this. So this thing coming back down here, and then getting up something like that. And then when we see this happening, you will see price getting above that neckline right here, that resistance right there, that pivot, right? And that's gonna look something like this. And that could make, I don't know if you're gonna see a huge rally like this, but that's gonna get us at least another week or so of a bullish run. So this is kind of, I've given you this scenario. This is kind of what you wanna look for early next week. Let's flip back to the daily chart and talk about long term. So what we were analyzing back there was just like this, just right here, right? This is all we're looking at. And when we're analyzing it, you know, short term, this is all we're looking at. Remember, that's all we're looking at today. Every day when we analyzed it, remember this entire week, we're looking at the oscillator, we're looking at the pivots, the gaps, the island bottom, island top. All we were doing was just looking at that. So keep in mind that these short term, you know, these analysis, there's some value in that if you know how to, if you can understand not only the short term but mid term, long term, primary term. But keep in mind that there will be up and down shenanigans in the fluctuations. Short term sentiment will shift quickly, right? But what the sentiment that's not going to shift quickly is the midterm, right? So midterm is something like this. This is a midterm. This is a midterm support. What about long term? This is a long term. What about primary? Primary term is if I go all the way back to 2009. That was the last time we had a real bear market, real recession was 2008 and 9. So if I go all the way back, if I bring my chart all the way back to 2009, look at it until today, that's a primary term. After steep correction after COVID, that will be a long term, right? So something that's the trend that didn't change is the midterm and the long term. The long term trend didn't really change for over a year. The midterm trend didn't change for about, let's see, November, so about 6 months or so. And you can see we got, you know, there's that pivot here. There's a midterm uptrend support. And then there's that rising pivot, prior resistance, support, support, support. And looks like we saw that little double dip, double bounce there right on that vicinity. Not to mention, I have my moving average right here. You can see that pink dotted moving average. That's what I call midterm moving average on my daily chart. And so you can see that's where that pivot is colliding, that midterm support, uptrend support, and my midterm moving average colliding all in that vicinity. And we did, it looks like that level has been acting as pretty solid support, at least this week and late last week, right? It is no coincidence. It is no mistake. It is not a random occurrence that market decided when we did see a pretty fast pullback for a couple days that it's going to slow down in that vicinity. So I think as long as we stay above this stuff, and first of all, are we bearish or bullish in the midterm? Just looking at this chart right here. Are we bullish or bearish? We're definitely bullish, right? We got the low, higher low, and higher low. Well, we're in the vicinity of higher low. We don't know for sure if that's going to be truly higher low. We wouldn't know until we cultivate that higher high, but you can see that high, higher high, that's a higher high. So that's how the market fluctuate with the higher lows and higher lows. So in the midterm, we're on an uptrend. So we want to continue to give benefit of the doubt to the buyers in the midterm and the long term. And what we want to look for is that this pivot and the rising uptrend support holding, right? As long as we hold this level, I want to continue to give benefit of the doubt to the buyers in the short term. Let's say you say, well, okay, what if next week this thing start coming down, getting below it? Is that going to change the trend, right? Let's say if this thing start coming back down here, does that mean it's bearish? Actually, no. So you have to understand here. Let me do this for you. I'll do a little quick exercise, right? Let me do an exercise right here. So let's say this is today. This is today. And then what I do is I'm gonna do this. I'm gonna throw that support right here. And then there you go. So I'm gonna be like, okay, let's just say this is today, right? Let's say this is today. So I tell you, well, in the midterm, we want to give benefit of the doubt to the buyers because you can see that the supports are holding. Not to mention, we got higher highs, right? This was back in what? February 24th. And then you say, well, okay, if we break below it, well, I'm going to go very bearish because you tell yourself, if we break below this support, well, all hell's gonna break loose. I'm sure you heard somebody saying that on social media, right? What they don't understand is the cultivation of higher lows and higher. These pivots and the supports is just gonna give us a reference point, but what's most important is that market is too savvy for you. You always think certain ways. Market knows how to take your stop and take your shorts and then make you lose all your money and go up without you. So look, next day, oh my gosh, this happened because probably, if you're chasing it and you're short term, next day you're gonna start freaking out because look at a day before looked very bright. Looks like the market is ready to go to 410, man. Look at these follow throughs with that hammer candle right on that support. Everything looks perfect. Looks just perfect. And then next day, boom, right? And then everyone's freaking out. But you say, well, okay, we're still right underneath it, so we're all good, man. And then next day, okay, little quick whipsawing action, and then it start coming back down, and you're like, oh, there you go. There you have it. Because you can't even adjust this support a little bit right here. And then you might look at it like that, and you say, you know what? That's it. This is it. This looks ugly. This looks like ugly, man. This looks ugly. We just broke below this support. And what happens? You quickly get out of your longs, maybe even flip short or something like that. And next day we see a bounce. And then this is where I heard from a lot of people, not only on my YouTube comments, but maybe Twitter replies, things like that, that is a head and shoulder formation. If I can remember correctly, when I was doing this analysis back in April, early March, I talked about how these head and shoulder formation, I don't know the last time I actually saw these head and shoulder formation plays out. Just because so many people look for these kind of patterns, it's all it is just faking people out, right? So then people are going to start maybe adding to their short. Maybe they went short here, they're adding to their short, and then boom. So what happened? What is this? That's a trap. Market just trapped you. Trapped your shorts. You lost money because you were probably panic covering somewhere here. And then you got stopped out. And then by the time and maybe you thought this is triple top here because you saw a little pullback here. By the time you realize you're wrong, it's way up there. So what went wrong here? What went wrong here? because you put too much weight on that support line, because market knows where you're drawing at. Just because you draw a couple lines, you're not a technical analyst. Keep in mind that, you can see when this thing came down, first of all, my midterm moving average is still supporting that level. So we wanted to what? Continue to give benefit of the doubt to the buyers. Also, if I go to line chart, we can see that this subtle low is actually higher than this low. So can we all agree that we're still in an uptrend, regardless what it looked like in the midterm of things? In the short term, yes, we can say that in the short term there's some selling pressure, yes. But in the midterm, can we give benefit of the doubt to the buyers? Yes. And then this is what happened, right? This is what happened. And then people start chasing back up. This thing comes back down. And it is no coincidence. It is no mistake. It is not a random occurrence. Right on that midterm moving average, we finding currently support. So what I'm saying is, because what I trying to accomplish with that little exercise, I drew this support, and some of you is gonna start freaking out once this thing breaking below it. You're gonna start to get your longs stopped taken out, and then you're gonna start shorting, and you're gonna lose money on both directions. And market is absolutely amazing doing that, right? So don't be a sucker. Don't let the market bully you around like that. You know what I mean? Don't let the market take your money, go without you. So understand the big picture of things. So I want to continue to give benefit of the doubt. You can see, even if let's say some kind of shenanigan, because I won't be here next week. Let's just say there's a shenanigan. I would look for 388 here. You see that 388? That's my longer term moving average residing at this one. Last time it got retested was back in November, early November. So it does have a quite impressive resume. So that might be somewhere in that vicinity. The market is going to be so good at taking your stop right here and gets right back up. If anything, for me, if I saw something like this right here, I would wanna buy this dip. If I do, and I want to see some sort of panic, people just freaking out calling for top. Let's go to Qs here real quick. Qs, pretty much same story here, man. We got the rising uptrend support. Sometimes these kind of conspicuous supports, they hold. More often than not, they don't, but sometimes they do hold. So we can't just completely dispute it. We have to kind of understand that, okay, we market decided that it was going to do that. And you can see on the Qs, we're actually staying above my both of my short-term, mid-term moving average. My longer-term moving average already got retested a couple times there. Got a little gap here. I think there's that neckline here short-term. I think if we stay above 325 and 36 in that uptrend support, I think we want to continue to give benefit of the doubt to the buyers. But in an event that you see some sort of shenanigan, right, I wouldn't start to freak out. And because there's actually gap here, I actually removed that gap to make my chart cleaner, but there's a gap here, probably somewhere is going to provide support. So, obviously, man, can the market just go straight tankage? Yes, anything can happen. This is life. Anything goes. But as far as a probability is concerned, statistical probability suggests that because we're in this bull market, any kind of shenanigan, any kind of down move, it could be some sort of head fake, you know what I mean, to catch people off guard and to market bully around, take your money, and then make a move to the upside. So we want to just think about where Nasdaq's been, where we're at today, right? A lot of people were scared to death this entire move, and then when we got to the all-time high, nobody was buying down. Do you know anyone buying at all-time high level here, right here? Do you know anyone buying at all-time high level? Probably you know nobody, right? Probably you know nobody buying it up here, right? Well, I was buying it up here on the index fund, on the Nasdaq and semiconductor. So I actually bought it right on that first dip. And if you look at it now, you're going to think, that's absurd. That is absolutely absurd. I mean, after making this kind of move here, from here to here, and keep in mind, I was already in, Nasdaq index fund somewhere here, and I added more equal amount to what I've entered, right? I'm holding it. I added more just on this day, as my clients know. Well, why though? Why would I do such a thing? Well, my analysis tells me that there's a good chance that not only this thing could continue, we could continue, you know what I'm saying? We might see a little bit more further pullback, but I didn't see a whole lot of pullback. But also I understood not only market is really good at taking your stop out, but market also really good at getting these really short-term corrections and making you wait for bigger pullback and then keep going higher, leaving you behind. I also know that. And here I really felt like that's what this was. Obviously, I can't see the future for sure. I just took that bet and I was willing to go through more drawdowns. That's what it was, right? And then turned out to be, look, boom, and look where we are. You see what I mean? So people were scared to death this entire move, and then I added more here on this dip. And then look, we're at 327 already. So you want to stick with the trend. We want to give benefit of the doubt to the buyers because none of us knows how long this trend will continue. Remember, market can correct through time, you know, and consolidating. These consolidations are very, very healthy. So market digesting its gains. I think Nasdaq is ready to make another move. You've got a little gap here. We're gonna probably slow down again since I'm not gonna be here next week. Just keep in mind there's a gap here, and that's gonna slow things down unless we get up here and gap it up, right? And we got the all-time high level. I think there's a good chance if we can have a smooth transition right on that gap, there's a good chance more Nasdaq is getting ready to make new all-time highs, make a move to the upside. So overall, looking at the equities, I want to continue to give benefit of the doubt to the buyers. We're still in a midterm uptrend with the higher lows and higher highs, and just kind of the price discovery phase to figure out where the higher low is going to be. And every time when there's a price discovery phase, there's always going to be a little bit of volatility, shenanigans, just to keep people out and make sure not being part of it. Market is really, really good at that. This is where there's a saying, market always follows the majority, right? Let's go to gold here. Let's look at GDX. GDX is looking pretty good because we found that support right on that horizontal pivot. It is no coincidence. It is no mistake. It is not a random occurrence that has decided it's going to find support prior, resistance, support, and support there. So and it's been in lower highs in this kind of a midterm downtrend while the primary term long-term uptrend. And this is a good cultivation on GDX right here. You can see that we got equal highs right here. That's a first step. We got a next step right here. So sooner or later, we need to kind of reclaim that, pull back high. We already got higher lows on GDX. You can see those higher lows and highs. So we got the short-term uptrend going. Now we got to turn this midterm downtrend into midterm uptrend. And that's what the GDX working on. That's a next high there. Once GDX probably want to reclaim it and cultivate that higher low and then make a move. I am bullish in GDX. I've been buying. I didn't buy it right at the lows here, but I've been accumulating miners and silver and gold in this vicinity and continuing to buy as it came lower. I got heavier in that vicinity and I'm holding full. So I think gold and silver miners have a good bright future again, but that doesn't mean it's gonna go straight up. It's gonna have its fluctuation. And you know what, the market, if you're one of those weekends, gold and silver miners we'll figure out how to get you out, how to bully you around. Let's go to Bitcoin here on the video with this. Bitcoin is currently down 50% since the peak. As you can see right here, 50%. And you guys know that I completely exited all my Bitcoin longs right here at 53 and greater. And this is a long that I got in here. As you guys, there's a video on it back in October that I'm talking about that I'm going long, I'm buying long here. I was accumulating not just one time, like 3 times, about here, about more here, about more here, and then wrote it. And then there I exited, added more, and then I exit everything here, like partial exit, added more, and then I completely exited here. And you can see this gap must be filled. Do you really think it was a coincidence? It wasn't able to fill this gap when it tanked. You think it's coincidence when it bounced up here, not able to fill this gap and then tanked more? And I talked about this rising pivot. I didn't want to see this market getting below it, even retesting it, because now you can see those moving averages curling back down. And this is when things can get dangerous for something like this. It's tough to just buy the dip on this, something like this. If you bought the dip here and here, well, you lost everything. If you bought the dip here and here, you lost everything. And so we have a track record having a Great Depression in back in 2019, and then having a dot-com bubble crash in 2019 and 2020. Just each year, it looks like Bitcoin crashes down 90, 73%. I'm not saying that's what's going. It's already down 50%, right? When was the last time S&P came down 50%? Do you guys remember? You guys probably don't remember. 2009 and 8. That was 13 years ago. Do you know the last time Google came down 50% or more? Do you know the last time? That was 13 years ago. That was 2008 and 9. Google never once saw 50% decline in the last 13 years. Google's seen 20%, even 30%. Even after the COVID, it only saw 30% correction. There are a couple of times, I think back in 2012, you saw 30% correction. Saw a couple of 15s and 20, but not like this. You really wanna put your financial dependency on Grayscale Bitcoin or Grayscale Bitcoin or your Bitcoin when it does things like this. Is how you're gonna ruin your life. Because it's everywhere I go. As soon as people find out what I do, that's first thing they ask. They don't ask me about Google. They don't ask me about value investing. They don't ask about compounding. But they will ask me about Bitcoin. You know why? Because they do not understand. I'm not against trading Bitcoin, because I traded Bitcoin going long here writing this, but I'm just going to be trading Bitcoin. I'm not going to be long-term investing in this. You know what I'm saying? So it doesn't look too good at this point, especially we gone below this level there. My long-term moving average residing at around 2274. So we got a lot of these up gaps here. I think it's going to provide some support, but I can't say it could provide some support in this vicinity. But you know what? I can't say that this thing is gonna go right back up to all-time highs and keep going higher. It could happen, but I didn't buy any Bitcoin. I didn't buy any of these levels, and I don't want to buy it at this level. I hate to lose money, and just, you know what I mean? And in an asset class like this, you gotta be very, very careful. This isn't something where put all your money into this and hoping that you're gonna become a millionaire 1 year later. That kind of mindset is how you're gonna lose all your money. That's a gambler's mindset. That's people who go out there and trying to buy lottery tickets and hope to hit big one day, but 9.9999% will not get it. You guys enjoy the rest of this weekend. Again, I will be gone. I will be traveling next week, so I'll be gone all throughout next week. I will be back June 1st, which means after the Memorial Day. So you have a 1 week without me. I did my best trying to equip you for the coming week, giving you all these different scenarios, understanding, not just looking at the support and pivot, but understanding where the higher lows are and some of the moving averages. Also, I'm going to have a very, very limited access to social media. I don't do social media, so when I'm on my vacation and things like that, I'm not going to be doing it. So if you don't hear from me, just know that I'll come back. If I have time, I will, but probably likely not. So there will be no video until June 1st. So you guys be good. Well, I'll come back and see where the market is at. We'll go from there. You guys enjoy this weekend, and good luck trading all next week.